And let's start with the first module, which is Introduction to the Financial Services. Once you have gone through the first module, you should be able to define what financial services is. You should be able to know or explain about the different types of financial services available and the concept of non-banking financial company and the prudential norms which is being guiding the NBFCs. And before starting with the module 1, which is the Introduction to Financial Services, there are few things that you should already be aware of, and these are the prerequisites to learning the first module, and which is the very basic concepts of financial system as well as financial markets, an idea about how the financial market or financial system has been working, what is the stages in which the financial system has been developed in India, and as well as it should have an awareness about the financial intermediaries that exist in India. So these are the prerequisites before you start with the first module, which is the Introduction to Financial Services. So to begin with the Introduction to Financial System, let's see what financial system is. It's very common that you hear the word finance or finance function. So what exactly is finance or finance function? To common people, finance is merely cash or cash equivalents, money or money equivalents. But when it comes to a business environment, or when it comes to the economy of a country, finance and finance functions is more than money and cash equivalents, or more than money and money equivalents. So the finance function is basically it's raising of money or raising of funds, and the investment of funds into various assets, and it also deals with yielding the return from these assets and distributing it to the shareholders. So basically finance function are the functions which is being done by the finance in a business or in an economy. Is it raises the funds, it invests the funds in various assets, and it yields the return from these assets, and these returns are being distributed to the shareholders. So these three are the basic finance functions. And you can like the first function, which is raising of funds. This function is being otherwise known as acquisition of funds. In common economic or business parlance, you call it acquisition of funds. And the raised money or the raised funds are being invested in various assets, and you yield a return on that investment. So together this investment and the earning of return, together these functions are being called as the use of funds. So basically the finance function is acquisition of funds and its use in various investment avenues. So this is the basic finance function. And every business at one point or other, every business has to directly or indirectly deal with these activities of raising funds and investing these funds in assets and yielding a return. So every business have to deal with this, and these activities are made possible by a financial system in an economy. And you can see what a financial system is. So a financial system, it's basically a platform which enables financial transaction. You can say it is an institutional framework. When it comes to a country, we can say that it is an institutional framework which brings together the depositors and the investors, or you can say the savers and the people who need money or the borrowers are brought together into a common platform called as a financial system. So that is basically what is being done by a financial system in an economy. It establishes and it provides a regular and efficient means of a means or a platform which is very cost effective, and it connects savers and borrowers in this platform. So that is the basic function that every financial system does. And they mobilize fund from the saving or the surplus units to the deficit or the borrower units. So this particular action or activity is being facilitated by an efficient financial system. So financial system, it's an institutional framework which exists in a country, and it enables financial transaction in the economy. It involves a set of activities which enables or which channelizes funds from savers to depositors. And a financial system, it's usually a collection of various components such as financial markets, financial instruments, financial institutions, and we have financial intermediaries which offer financial services. So in an economy, if there exists an efficient financial system, it facilitates not only economic growth but also efficient financial transaction between these financial institutions. So earlier I have mentioned that a financial system is a framework. It is an institutional framework which brings together certain components like financial market, financial institutions, financial intermediaries, and financial instruments. So these components of a financial system, they are interdependent components. Like none of the component can exist individually alone in a financial system. They are always interdependent. And together these components collectively form a financial system and enables financial transaction in an economy. Financial system always perform the essential functions in an economy, like it maintains the payment system, it facilitates the collection and allocation of savings of the society, and it creates a wealth store where the borrowers can find money which is necessary for them. And every financial system, in order to function effectively in an economy, demands these essential components. And without the existence of these components, a financial system can't exist in any economy. And you can see which are the essential components. They are financial instruments, financial institutions, financial markets, and various financial services. And these financial services are provided in an economy by a group of institutions or group of people called as financial intermediaries. Now, this is the structure of an Indian financial system. You can see an Indian financial system being divided into basic categories, and you can see further subdivisions or subclasses of these financial system. Now, let's see in depth what the Indian financial system is, what are the various classifications and subclasses in an Indian financial system. So the components of the Indian financial system are basically divided into two categories. You can see it is organized financial system and unorganized financial system. So what is an organized financial system? Just as the name suggests, organized financial system will be always directed or will be always regulated by set rules and regulations. So there, in an economy, there will be few rules and regulations, and there will be regulators who control the financial system, and everything will be more of organized or in a orderly manner. You can in an organized financial system, you'll be able to see a high level of instrumentalization as well as institutionalization. And this organized financial system is classified into four categories, and we'll move, before we move into that, we can see the second classification of Indian financial system, which is unorganized financial system. Just as the name suggests, there won't be much of rules and regulations. There won't be a strict regulators or appointed regulators to control this particular financial market or financial system. So basically, the Indian financial system divided into two categories, which is organized financial system as well as unorganized financial system. And in each of these classifications, there are specific institutions, there are specific intermediaries working to offer a set of financial services using different financial instruments, which we will be seeing in the lessons forward. Now let's see how the organized financial system is being classified. It is being classified into four. It is financial market, financial institution, financial instruments, and financial services. Now we'll be seeing in depth what each of these means and what are the subclassification of each of these organized financial system. So understanding of an Indian financial system requires understanding of each of these components in depth. Now first, let's see what financial market is. Now in the beginning, we'll see how financial markets are classified, and then we'll move on to the explanation. Financial markets are basically classified into two categories, which is capital market and money market. And in capital market, you have further subclasses, which is primary market and secondary market, which is again divided into further other classes. We'll be explaining it in the further slides. Now, money market is being classified into further as call money market, commercial bills market, discount market, acceptance market, treasury bills market and repo market, of which we will be discussing the most important ones.